Alright, hey guys, Scott here again with a brand new video, and so this one here is going to kick off a brand new series basically for my channel. So now that I have access to a very powerful backtesting platform here with Option Alpha, I can now perform very detailed research and test pretty much any kind of option trading strategy over many years of stock market data. Right, so as you're going to see with these videos going forward, I'll be testing things like buying call options or put options, selling credit spreads, iron condors, strangles, all different kinds of management styles and different kinds of criteria, stop losses, profit targets, all that kind of stuff. And we're going to see which kinds of strategies and which management styles are the best. And so in particular for this video, we're going to begin with something pretty basic and straightforward. So we're going to compare 10 years worth of buying call options on SPY as basically a more leveraged way to try and invest in the market over the long term, and comparing that to 10 years of instead selling put options on SPY. And so as per the name of this video, I think you guys are going to be very surprised by just how different the results are going to be between these two different backtests. But before we do dive in here, if you also want to be able to perform these exact backtests yourself, in addition to being able to automate your specific option trading strategy, then make sure you watch until the end of the video. And then also here, if you want to join a very exclusive online community where you can learn how to trade options and my overall approach to the markets, then you can now join my options trading Discord as well. So definitely check out the video description below to learn a lot more about that. And then lastly here, for anybody who is also brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you will also find some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you join Skillshare using those links, you'll get a full 1 month free trial. Alright guys, so now we'll dive in here, and so what you're seeing in this page is the backtesting software that's part of the Option Alpha platform. So as you can see on the top bar here, the backtesting feature is only one feature that this platform does offer. And again here, stay tuned until the end of the video to learn a lot more about everything this platform does have to offer. And so I've already gone ahead here and run both backtests between, again, buying call options on SPY versus selling put options on SPY. So in this first tab here, let's take a look at the buying call options approach. And so up top here, you can see all the different configurations for this specific backtest, where in particular for both backtests, we're going to begin with $100,000 of capital. And then over 10 years of SPY data here, every single week, what's going to happen is this automation software is going to purchase a call option or perhaps many call options on SPY, where in particular every week, it's going to take 10% of our total capital, which you can see right here. So for example, 10% of 100 grand is $10,000. So again here, every week, it's going to take $10,000 and use that money to buy as many call options on SPY as possible. And it's going to continue doing that every week until a maximum of 50% of our capital is being used at one time. Right? So basically, we're always going to leave half of our capital just sitting in cash to accommodate drawdowns and some bad losing streaks. And then in particular for the actual call options, every single one of these contracts is going to have a 50 delta, or basically have a strike price that's right at the money. Right, so in other words, the strike price of the call option and the actual price of SPY are going to be basically the same. So then naturally, of course, if we're doing this every single week, then we're going to be buying call options at various different strikes and basically just follow the market as it moves along across time. Right, so it's very similar to simply dollar cost averaging and investing into SPY with some amount of money every week or every month. And then also all these contracts have 30 days until expiration. And then finally, no specific stop losses or profit taking is going to be considered for this particular test. Right, so basically every week we're just going to buy call options based on our risk parameters here, and then just hold those contracts all the way until expiration. So ultimately here, a pretty simple test, but I did so on purpose for this video because I wanted you guys to see just how effective simply buying call options on stocks actually is versus selling put options on those stocks. And so with that being said, let's now come down here and take a look at the results. So again, in this chart, you're seeing 10 years worth of daily fluctuations for this portfolio, which again began with $100,000 of capital. And so as you can see here, there are going to be moments where buying call options definitely works very well. I mean, taking a look right here at this point, back in January of 2014, At this point, you've made almost $900,000 of profit. That's pretty huge. But unfortunately, not long after that, you lost everything and actually went negative for looks like multiple years. And so in fact, between the time of looks like 2015, September 2015, all the way until about November 2019, so 4 years basically, you made no money. And you were still basically right at your starting point of around 100 grand. And then fast forwarding to recent years with all this crazy Federal Reserve stimulus because of the COVID pandemic and all that. And so of course, stocks in the past couple of years have just been exploding higher. So naturally, of course, buying call options would be expected to do very well. And it did, right? So basically ever since the bottom of the COVID crash, this portfolio made a profit of just over $1.3 million. That's pretty crazy. But once again, now in 2022, with this new bear market, you lost everything and basically fell back down to your starting point from 10 years prior, right? So at least because in this test, we're not allocating 100% of our capital, only 50%. So because of that fact, that's why the drawdowns here are still catastrophic, but not to the point where the portfolio actually goes to zero. Right? So even with this massive drawdown, at least you came back down to your starting point instead of your portfolio going to zero. But bottom line here, seeing this crazy amount of volatility and still not really making any money in the long term, this is why buying call options in general does not really work. And then if we scroll down a bit more to see some of the more nitty-gritty details here and statistics, we can see by the end of this testing period, we still made a profit of about 50,000 bucks. Which compared to our starting point of 100 grand still is a 50% return. Not too bad, but again here, keep in mind that this is over 10 years of data, and also the maximum drawdown was almost 100%. Right? Again, you went from $1.3 million of profit and gave all of that back. And then on top of that, across all the trades, which as you can see here, there were 500 total positions, the average win rate across all those trades was about 50%, which is to be expected, right? So in the grand scheme of things, daily stock price fluctuations are pretty much near random. So the chance that a stock goes up or down on any given day is literally about the same as flipping a coin, 50-50. But ultimately here, I think bottom line, we can all agree that based on the results of this test here, that buying call options is not a very good approach, right? The volatility is just immense and the final profits at the end were not that significant. And that's because when you do buy options in general, you have to fight against a lot of disadvantages, namely time decay, implied volatility contraction, and generally a lower chance of profit. Right? Because when you buy options, you have to pay money initially to get into that position, which means the profits you have to make on that option have to be more than the debit you paid to buy the contract. Right? So for example, let's say you bought a call option for perhaps 500 bucks, and then by the expiration date, that option was profitable by 400. Doesn't matter. You still spent 500. You made only 400. So the net effect is you still lost 100 bucks. So again here, that fact plus time decay and implied volatility contraction, all these things make it very difficult to profit when you buy options in the long term. But now with all that being said, let's come back to the top here and take a look at the same kind of test, but instead of buying call options, we're going to sell put options. So now we'll go to this tab. And once again, these are the configurations for this backtest, which are pretty much the same as with the call option. Again, starting with $100,000 of capital. And same thing, every single week, we're going to take 10% of our capital or 10,000 bucks and sell as many put options as possible on SPY with that amount of money. But of course, also only up until we're using 50% of our capital in total. At that point, no more new trades are made until existing trades come off for profits or losses. Now, one thing I must clarify though is that this testing software does not allow you yet at least to simply test short naked options like selling put options or call options. So for this strategy, I had to actually test selling put credit spreads. Now that being said, I was still able to mimic selling naked put options by making these spreads very, very wide, right? So as you can see here, the short contract of the spread has a 50 delta, just like the call options did in the previous test, basically right at the money. But then the long delta or the long contract as part of the spread here has only a 5 delta. So it's super, super, super far out of the money. And therefore, this kind of a credit spread here behaves just like a naked option. So just wanted to clarify that. And then lastly here, same thing, no stop losses are used, no profit taking, basically no management whatsoever. Just sell the put options and then hold everything until expiration. But even doing nothing at all to manage these trades, as you can see down here with the results, obviously this kind of strategy does way, way, way better. So once again, we started with 100 grand of capital, and then by the end of this 10-year testing period, we still made almost $500,000 of profit. And that's compared to only $50,000 of profit with the call option backtest, right? So that means selling put options here did 10 times better. And even though this approach did not reach the maximum profits that the call options were able to attain, but still here at the highest point, this portfolio made almost $800,000 of profit. And then of course, as to be expected in this bear market of 2022, there's been a pretty considerable drawdown, but as you can see in the past here, there were many, many drawdowns, but every time this portfolio was able to recover and go higher, just like the market in general. So lastly, coming down to the major statistics here, we can see by the end of this testing period, the final return was almost 500 grand, which is a 500% return almost on our beginning capital. That's much, much better for a 10-year investing journey. Moreover, the maximum drawdown was only 41% compared to over 90% with the call options, right? So the overall volatility with this approach is significantly less as well. And then finally, your win rate is going to be much, much higher too, right? So even though we are selling credit spreads basically right at the money, but because when you do sell options, you collect a credit, you collect money up front instead of paying money up front, that's what gives you a much, much higher chance of profit. In addition to time decay is on your side as an option seller, it works in your favor, and so does implied volatility contraction. So bottom line here, guys, I think it's very obvious based on the results of these tests that just selling put options by themselves and not doing any kind of management yet, at some point in later videos, will include more management and criteria, stop losses, profit targets, all that. But just selling put options by themselves, that is clearly a much, much better approach than buying call options. And then once we do start to incorporate more management techniques with these back tests, I think you'll find that probably both strategies will improve quite considerably, both call options and short put options. But I'm willing to bet that still selling put options is always going to beat buying call options. But we'll find out for sure in future videos. And so with that being said, that's going to do it for this video here. But of course, one last thing, if you guys also want to perform these same kinds of backtests yourself, in addition to automating your specific option trading strategy, then join Option Alpha today for a free 30-day trial. And so this powerful and very easy to use software allows you to rapidly configure trading bots that will execute your exact trading strategy automatically. Right, so it's the perfect way to eliminate human error and emotion from your trading while also ensuring that your portfolio is always being actively monitored and managed while the market is open. And as you saw in this video, you can also use Option Alpha's powerful backtesting software to improve your strategy by continuously testing and refining your approach over decades of stock market data. And finally, the Option Alpha platform offers a huge online community where you can engage in discussion with other traders, get answers to all of your questions, and find inspiration for new trades and strategies. And so if that sounds good to you, then again, use my link in the description of this video below to sign up and begin your 30-day free trial. And also don't forget to check out and join my options trading Discord as well as my SKILLSHARE courses. Links also in the video description. And finally here, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.